U.S. consumer spending gaining some momentum as we head into the holidays. Spending per household on Bank of America credit and debit cards rose 1% year over year in October. That was a rebound from a 0.9% decline in September. And joining us right now to talk about it is Liz Everett Krisberg. She's the head of the Bank of America Institute. Liz, how would you qualify, or how would you describe the strength of the American consumer right now?
I think the way to understand the strength is to look at consumer confidence, right? And we saw last Friday consumer confidence continue to go up for the fourth month in a row. We're now above where we were back in April. And the question is, why is that? And our data gives a little bit of a clue in that when we look at the spending on necessity goods, so gas, for example, it's coming down. Why? Because gas is deflating, because the prices are coming down. If we look at groceries, food inflation is also coming down. So as consumers are feeling better about not having to spend as much on necessities, we're starting to see an increase in discretionary services. Restaurants in particular continue to go up. So that feeling of confidence of the consumer is, I think, what's driving some of the momentum.
We've been trying to get a feel for what's happened since the election. It's really easy to see investor confidence when you just look at the stock market and the gains that we've seen in so many places there since Election Day last week. The data you're looking at is through October 31st.
So it's through the end of October, right?
What can you tell us about anything you might have seen since the election?
Well, you have to have me back next month to talk about that. But what I can tell you is about expectations, and we're talking about the holiday season. I know it seems early to talk about holidays, but we are in November. And when we ask consumers how they feel about the holidays, we did a survey, they are saying they're going to spend on average $2,100 on the holidays this year, which is 7% higher than it was a year ago when they answered that question. Now, before you get excited that there are going to be more presents under the tree, the reason they are going to spend more, they're saying they're going to spend more, is because they are anticipating higher prices. Now, we're also seeing 60% of the people said that because they're anticipating these higher prices, they're going to do more shopping at discount stores, they're going to do more value shopping, trade down, which is consistent with what we've really seen through the summer. We saw this in apparel stores, we saw this in restaurants, et cetera, where people are trading down to more value, but they're still consuming more. And I think the really other important part to understand is what's going on with wages, because wages are going to continue to drive the consumer. And our wage data, our deposit data, is showing that every group is seeing their take-home pay accelerate. Higher income in particular, which is really important because, as you know, the higher income drive more of the spending. Right. Their wages are up 2%. We're up 2% in October, which is a rebound from kind of the flat to negative of last year.
Is that a precursor, or tell us anything about the potential for inflation, like wage-driven inflation?
Well, it does a little bit. Now, it's up 2%, but remember, it was up high single digits, double digits before. So the wage inflation is coming down, but it is still positive, and I think that that's an important part that's bolstering the consumer's confidence. Can
you break out spending geared towards Halloween or anything that people were preparing as a pre-holiday?
We don't break out Halloween in particular. We have a series that looks at what we consider holiday spending. And one of the things I would say that's interesting to consider, and some of this may be that Halloween is considered a holiday, but consumers are now doing more of their holiday shopping. They're starting earlier, and they're doing more of it online. So when we look at the holiday spend in October so far, it's tracking above where it was in 2023, starting above where it was in 2022. And that is also because consumers have changed how they do that shopping. So no longer are people going to the mall on Christmas Eve, like my brother, and starting the shopping then. Instead, that the period around Cyber Monday, which is coming up, is becoming increasingly important. So since 2019, that has now grown to be 13% of total holiday spend.
Wow. So even if you're seeing this increased online spending heading into it, that doesn't necessarily tell you it's going to be a better holiday shopping season?
Correct.
For the retailer?
Correct, it doesn't. But I will say that when we look at the October data, again, the shift to not only earlier but online, we're seeing online spend growth double the rate of brick and mortar spend growth. Wow. So people are shopping, again, earlier, online, but it still looks like there's momentum for the holiday season.